A lot of you are worried about how to manage an underwater position or when to roll a position that is at the money or about to be underwater. So you're like right there. In today's video, I'm going to show you exactly that on Robinhood. Robinhood is up 53% for the month. It's absolutely piping red hot. It's about to or not about to be admitted to the S&P 500. We're going to know today after the bell. I currently have 25 covered calls, $75 strike price, with some of them expiring on June 13th, and some of them are expiring on July 18th. And for the Robin, I have a $21 strike price. Meanwhile, Robinhood right now is trading at $75 roughly, and Robin is currently trading at $34, $35. So I'm underwater on one play, and on the other plays, I'm pretty much even Steven. So the question is, what would I do in order to manage these plays? Besides for that, I'm also going to be showing you what would I do as an entry point for selling cash secured puts on Robinhood today, and what would be my entry point for selling a covered call if I already own the shares of Robinhood. Most importantly, I will be showing you the technical analysis, breaking down my thoughts, my ideas, and my strategy. And hopefully, this is going to help you in managing your portfolio. Now, remember, I am not a financial advisor, so don't misconstrue this as financial advice. I'm just a 42-year-old who retired last year in 2024 at the age of 41 years old. I use high-paying dividend stocks to pay for my bills, and I use options premium in order to allow me to live a better lifestyle and pay for some nicer things in life. Further, just remember, with selling options, it is a mediocre to minimum risk. And one of the risks is you might get assigned and you lose some of the upside. If you are selling options, you need to understand that, specifically when selling covered calls, that sometimes you're not going to make the most gains, but you're definitely going to still be making good gains. And if you can get past that hurdle mentally, then selling options might be a fantastic strategy for you to supplement your 9 to 5 income or get into retirement like me. Take a look at the screen. Robinhood is absolutely running hot. It is currently trading at $75.33. It is up nearly 20% for the week. It is up 53% for the month. It is up 95% for the year. And this sucks if you're selling covered calls. So how do you manage a position like this? If you're in my situation and your average cost of Robinhood is under $20, you have a huge 2,500 share position, almost $200,000 of value. But if you go a little bit lower, you see that I have 10 contracts that are expiring on June 13th at the end of next week at a $75 strike. And then I have another 15 contracts that are expiring July 18th, also at a $75 strike. But the craziest thing is, I've been in this position before. If you go to this play right here with the $75 strike expiring on July 18th, I actually rolled this back in February when Robinhood had a $55 strike. So I went up from a $55 strike to a $75 strike, and I was able to push this out 5 months. And in today's video, I'm going to show you how I'm going to be managing these two $75 strike positions amongst other positions. But before I do, I wanted to just explain that these are in my regular brokerage account. And since my cost basis is $20 and my strike price is $75, if this was to get assigned, I would have to pay a significant amount of taxes, and I don't want to do this. So for this specific account, I want to make sure that I do not get assigned. I want to make sure that I'm able to roll out of this as best as possible and avoid assignment at all costs. With that said, let's go look a little bit on the technicals, and then I'm going to actually go through this play. Guys, I use TradingView. If you want a link to TradingView, I'm going to have one pinned in the comments down below. Some people have been asking me, and I essentially use these 3 different screens. The first screen is my main screen. You're going to see something called the Bollinger Bands, the top of the Bollinger Bands and the bottom of the Bollinger Bands. The Bollinger Bands essentially uses something called a bell curve, where one standard deviation, I believe, is like 68% of a possible range, and 2 standard deviations is 95% of a possible range. And this is a 2 standard deviation of a possible range of price movement for 30 days. All of a sudden, most people, when they set up their Bollinger Bands, is for 20 days. I like to use a 30-day movement. So this is saying that for a 30-day movement, this is almost at the top of a possible 2 standard deviation or 95% movement, with the top being right here at $76.79. Now, that doesn't mean that it can't burst past this. It just means that when it does burst past this, like you see right here, it ends up coming back down, and it could remain in a bullish state where it keeps going up. It just says that it's going to have some minor cool off. However, as you can see right here, back in February, it had this breakthrough and then it dropped down. And if you see right here, it had this breakthrough of the Bollingers, and then it was bullish, 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 and then it had a massive, massive drop. So what this is telling me right here is you're kind of playing a game over here that it might be cooling off. However, it is literally in all-time high territories, and there is no ceilings over here. The only ceiling that you're talking about right here is the top of the Bollinger Band. 20-day moving average, the 50-day moving average, the 100-day moving average, and the 200-day moving average is way below. And all of the volume shelves right here is way below. So this is showing me that if it cools off, there's a huge possibility that it's going to go down to roughly this $65 mark if it does not get into the S&P 500. However, if it does get into the S&P 500, this can keep going up. But what you got to remember is Robinhood is running super hot for the last month, assuming that it is going to be getting into the S&P 500, right? Palantir, when it got into the S&P 500, it was going up literally that day, few hours right before. Well, Robinhood's anticipation of getting into the S&P 500, and doesn't mean that it will be getting, has been running hot all month. So you as an option seller holding covered calls need to kind of say, okay, well, can it keep going higher? And now that we looked at the first screen, let's take a look at the second screen. This is called the RSI. On the RSI, this is running crazy hot at 78, almost 80. Anything above 70 on the RSI is overbought. However, it can stay overbought for a while, right? So this is back in May 13th, it was already overbought. And it's literally overbought the entire month. It's just been running hot. But in general, as you can see over here, it's overbought and then it drops. Over here, it's overbought and then it drops. So showing me this and looking at this, I'm going to now go look at one more indicator. And this is your favorite indicator. This is called the static oscillator. I know I'm going to be corrected. And anything above an 80 shows that it's overbought. And there's like this mini technical analysis within the technical analysis where this green line breaks through this orange line and it shows even a more bullish divergence. So this shows that it wants to run. However, it's already running at a 90 of a possible 100. And it's been doing this, like I said, since April, guys, for a month and a half. With everything that I'm telling you right here, it seems like this wants to cool off. Even if it gets into the S&P 500, it's possible that there's going to be a sell-off because they're going to be like, we were buying it and we had a run for the entire month at over 50%. And year to date, we're right around 100%. Stocks cool off. Doesn't mean that it's going to drop. It doesn't mean that it's bearish, but stocks have a tendency to cool off just like there's spikes once the stocks are really, really low. With everything that I'm seeing here, I think that it's going to cool off. I'm not saying it's not going to get to 100, but I do think that it's going to cool off. And you as an option seller, especially me who's holding these $75 strikes, needs to think, well, what is my best play? Do I wait or do I roll this? Now, I'm going to be perfectly honest with you. In general, I like to wait until the last week of these options. The last week of that 613 would be Monday coming up. However, since this is Friday, almost the end of Friday, we have the S&P 500. I don't want to take a risk, and I rather roll this up as much as possible. In this specific case, I don't care about collecting premium. I care about being able to roll this out where the premium I'm collecting can cover the existing premium of the existing contract. If you're unaware of how rolling works, click on the link up above. I have a whole video on it, but essentially I have premium that I collected on this contract and I have a value that this contract is worth. When you roll, you are trying to close this contract and sell a new contract and hoping that the sell of the new contract's premium they are collecting is going to cover the amount of premium that you owe on this contract. And that's what I'm going to show you right now. The first contract that I'm going to manage is this one that's going to be expiring on 6/13. For this initial contract, as you can see, I'm getting absolutely smoked. I collected 80 cents on this, I believe $800. And right now it's worth $3,400, $3,500, which means that I am underwater $2,700. And that's okay because I'm going to show you what I'm going to do right now. You're going to press right here and say roll option. And it's going to open up a bunch of beautiful different contracts that you could roll to. Also, one of the reasons why I want to do this now instead of waiting until next week, if you're going to be waiting and this pops up more, by Wednesday or Thursday, people will start calling in this contract and you won't have an opportunity to roll this. Usually Monday or Tuesday, you still have a chance. Like I never had an issue on it, but you don't want to take a risk because this thing is running hot. The good thing is that I'm rolling it right around my strike price. When you're rolling it and the strike price is roughly the same thing, you're going to get a really, really good deal. So the first thing I can do is see if I want to roll it another 4 weeks, and let's see what kind of deals I could do. So I have $3.55 left in this contract. I'm going to first go as high as possible and see what I could do to cover this. The very first thing that I could do is I can cover this 355 with this play right here, which is an $83 strike, and I would be getting $3.65 on this. This seems like a really, really good deal. Or I can do something even crazier. And sometimes if I don't want to lose my shares at all costs, I will just roll this out like 4 months, 5 months, 6 months. I can go to January 16th, 2026. And remember, the goal here is not to collect the premium. The goal here is to keep the shares at all costs. So I have a game to play. Do I want to try to test and see where the price is going? And I think $83 is actually a very strong price. Or do I want to go even higher and just see where can I possibly go? There's an opportunity where I just roll this 6 months out, set it and forget it. And this is going to bring me to a $115 strike. And I would still be collecting some premium. What would be the premium? I owe $3.60. I would collect $6.55. I would collect $3,000 and I would raise my cost basis to $115. Because I am absolutely frightened to lose my shares, and I don't really care about the premium collected. All I care about is keeping my shares in this specific case. I am going to be doing exactly this. I am going to go to a $115, absolutely absurd strike price for Robinhood. And I'm going to take this and not play around because I don't want to play a fool. I'm going to then press continue. And it's going to give me a range of $2.90 and $3.05. I can probably do $2.95 is going to give me a medium fill. I don't want to play around. I can maybe get $3. Let me see if I press $3. Let me see if $3 is going to fill. And then I'm going to press review order and I'm going to press submit. I don't know if this is going to fill. I'm going to check in just a moment, but let's go and do one more play. This is my Robinhood $75 strike. This is expiring on July 18th. And I have quite a bit of time value on this. Why? Because right now is January 6th. I have a month and a half on this contract. So I'd rather be rolling this in a month and a half. The problem is because it's already at $75, if I wait a month and a half and then the price of Robinhood is going to be, say, $80 or $85, I am going to have a problem. I am going to have a problem rolling this. Just because of that, and remember, I do not want to sell my shares at all costs. I want to keep this as long as possible for the next 10 years, Robinhood. Let's just see what I could do. I'm going to roll this position. And remember, I was originally in this at $55. I rolled from $55 to $75. I've been rolling this for the last 6 months from my initial play to the roll. So let's see what I could do. First, I'm going to see where can I roll this to and how far. I'm going to go all the way to January 2026, the same thing. I'm not going to play around. and I'm going to see what I could get. I owe $7.28. Let's go as far as possible. I can roll this to $110. I cannot roll this to $115. It's not enough. I'm okay with rolling this to $110. I'm not going to play around. I don't care about the premium, although I'm going to collect $150. I just want to make sure that I'm able to roll this. I'm going to press continue, and I'm going to try to get my 10 cents. And to be honest, even if I can't get 10 cents, I'll just get my 5 cents to roll this. But let's go to 10 cents. I'm going to press review order, and it's going to ask you, do you want a credit or a debit? You're going to say, I want a credit because I want to make money. You're going to press continue, and then you're going to press submit, and that's it. This play that I just did for $110, it already got rolled. So now my new expiration is January 16th, 2026. I am now not going to worry about this whatsoever, and I have a now $110 strike. I feel very confident about that, and I don't feel bad about this whatsoever. Let's go back to the other play. This play right here is not getting filled, so I'm going to press replace. And I'm going to go to the same exact thing where I'm going to go to January 2026. And I am going to go as much as I can. I'm going to go to the 115, and I am going to press continue. And $3 is not going to go through. Let's go to 2.95. This will definitely go through. Press review, press submit, and press done. And then it says you don't have any positions to roll, which means this immediately got filled. I want to give you guys some thoughts. Since this is a regular brokerage account, the reason why I picked January 2026 is even if I get assigned, I then don't have to worry about taxes until April 2027 because this was assigned in January 2026. I don't know what's going to happen, and I'm going to keep, managing this. But to be honest with you, I'm not worried about this whatsoever. And even if I do have to sell for 110 or 115, I wouldn't be mad because I bought it at $20. But at the end of the day, I'm still going to be able to manage this. I'm still going to be able to roll this. And I am looking very, very pretty on this. I hope you guys understand why I did this in a brokerage account. Now, I know this video is going really, really long, and I want to show you guys how I'm managing another position. But before I do, let me show you an entry and exit point right now if I was just getting in Hood. Because Hood is absolutely green right now, to sell covered calls would be really, really good. And I know you guys are going to say, but Adam, you're going to get in trouble. What I'm showing you, you can roll these. But at the end of the day, the premium you're going to be collecting right now, and I'll show you, is going to be ridiculous. And you see that it's running hot. Even if it gets to the S&P 500, there's a big chance that this is going to sell off. So if I was to trade options, I would press sell, and I would press call, and I would go 4 weeks out. 4 weeks would be June 13th, June 20th, June 27th, July 3rd. I would sell a call. The first thing I'm going to look for is something that says 80% in my favor. This would be right here. This would be a 30 delta. I want to go to actually a 20 delta. This is going to be at 0.11 delta. So I would be somewhere like right here. Boom. If this was me, okay, and I owned shares right now, I would be very comfortable selling a covered call at a $90 strike. And if you don't feel comfortable with this, you can go higher. But this is a $90 strike. This is a 0.21 delta, 86%, almost 86% in your favor. And you will be collecting $1.72. Let's go to the calculator. I don't know what your cost basis is. So you would take 100, you would divide it by your cost basis. Let's say you're buying the shares today, and you would say that I'm buying it for $75, you would come out with a number. You then times this number by the premium you will collect, which would be $1.72 times 1.72. This would pay you 2.3% for saying I'm willing to sell my shares of Robinhood for $90 on or before July 3rd if you get assigned. If you don't feel comfortable with this one, you could do this play right here. This is a 0.16 delta. This is giving you nearly a 90% chance in your favor, saying that you're willing to sell at $95, worst case scenario, not taking into account that you can roll this. Let's do the math. 100 divided by today's price of $75, and then you're going to times it by $1.20, 1.2 equals, you're going to be collecting 1.5% on your money, assuming you bought it at $75, saying that I'm willing to sell it at $95. which means, let's say you bought it at $75 and then it goes to 95. You would make 26% on your money, plus you would collect another 1.6% in premium. You are getting close to making 30% on your money if you were to buy shares today, saying I'm willing to sell at $95. So you would make 30% on this play, literally for a 4-week play. Do you see the power of selling covered calls? Now you might say, well, Adam, that's great, but what if I want to sell a put, a cash secured put? And to this, I'm going to say I would not be selling a cash secured put on Robinhood because there is no entry point where I would feel comfortable based on this crazy, crazy chart right here. I would stay away from selling cash secured puts when it comes to Robinhood. But selling a covered call, buying at $75, assuming it's $75, saying I'm willing to sell at $95 in 4 weeks from now, without taking into account wheeling it, without taking into account rolling it, sounds like a strong play, making 30% on your money. Let me show you one more play that I'm doing. This is a deferred account. So this is a tax deferred account. I don't care about getting assigned. I don't care about losing my shares, but let me show you how I would handle another play. And then this video is over. If you want more of this, I'm going to have a channel live on Sundays at 8 p.m. Eastern and 9 p.m. Eastern. It will only be for YouTube channel members. If you want to become a YouTube channel member, it's $10. Click on the link down below. Hopefully, I'm only going to have 10 or 20 people, and I will send out links where you could join me and we can actually speak instead of just typing. If you feel that you want to be part of a community group where we could go over plays significantly better than in a larger group. Guys, this is ROBN. This is a 2x leverage fund. I have a $21 call. This is expiring on June 20th. And right now, Robinhood is trading at $35.40. And I am really, really underwater, but I don't really care. Why? I bought this and I actually have an average of $8. And if I sell for $21 with all the premiums that I collected, I made roughly a 3x on this, tax deferred. I could not care less. However, let's just make some content. Why don't we? If I wanted to roll this, I can press roll and I can go as far out as possible. Now, the problem is this does not bring me to January because this is a ETF, leverage ETF, and they don't have as much liquidity. As you saw, Hood, you can go out to like December 2027, but Robin, you can't. Let's see where I would be able to cover this play. If I wanted to cover this play, I can roll it to a $30 strike and I would be able to cover this play. In this specific case, I will not be doing that whatsoever. I am going to wait at least one more week and wait until this cools off and see what I will be doing. However, as you can see, even though I have a $21 strike and I understand that it's lower than the $35 share price right now, I can still roll this even though I am so underwater, right? I am $15 underwater and I could still roll this, be it actually till December, but I can still roll this and make up some of this gains. And I could be rolling this to roughly this $31, making another 50%, right? $21 strike. I can go up to $31. That's another 50% on top of already my cost basis of $8 a share. I hope this kind of explained my train of thought, my process of, and showing you that there's a big difference between a tax deferred account and a regular brokerage account. The regular brokerage account, you want to have as much value as possible so that you can sell IOUs, cash secured puts, on other positions that you don't want to be assigned. So you want to make sure that you don't get assigned no matter what on those Hood shares. I want to keep them as long as possible, making money on my money. And as I showed you, there's a lot of options when it comes to options, and rolling is an absolute superpower that everybody should learn. Don't get scared if you're underwater on a play, manage it accordingly. And even if I was more underwater, right? Even if the price was $80 and I couldn't roll it, or it was even higher, I would just wait a little bit and see what happens, because it's quite possible that the price is going to cool off next week. And then you have an opportunity to roll out of this play even better. Let me know in the comments down below what you guys are doing with Robinhood, if this made sense, and ask me questions so that I could follow up on this. I'll see you guys Sunday night at 8 o'clock, and for my channel members at 9 o'clock. If you do want to be a channel member, there's going to be a link down below. Before you go any further, make sure you click on this video right here, another amazing options video. I promise you, you guys are going to love it. Thank you very much, and have a blessed weekend.